All right, good morning. It is Wednesday, April 17th, and we are doing another edition of the Investing Systems Swing Trading Show. Welcome, everybody. And we're going to take a look at the market and a few charts and just a casual general discussion today. So let me get everything started here. Um, let's see. Weird open today. It's very, very strange. So last night, Chinese GDP numbers came out, and they were a little bit better than expected, I think. And so the market actually had a little gap up this morning, a fairly decent gap up, and then right at the open, I'm gonna take a look at a 5 minute chart here. Yeah, this is really kind of a strange open. Fairly significant gap, and I mean, as soon as they rang the opening bell, it just started dropping and gave it all back. So, I don't know. We're kind of in the thick of earnings season starting up. Good morning, Jeffrey.
Hey, Bill. Yeah, if you notice that gap up there, that is all pre-market run up. I was watching the markets early this morning and I thought, oh, we're going to have a strong rally today. And as soon as they opened, they just dropped it.
Yeah, it was pretty strange, honestly.
But overnight action took the market higher. So,
Yeah, well, the Chinese number when it came out, I believe last night the market actually got a kind of the futures anyway popped on that. So on
well,
my
there's an old saying, market saying that the the night session and the day session, the difference is like when the parents go away out to dinner and leave the kids home, and the kids rearrange all the furniture and build forts and all that kind of stuff. And then when the parents come home, they put all the furniture back. So that gives you an idea.
That's interesting. I saw like a chart or a table or something recently that said that the majority of the gains this year have come from overnight gaps, which was kind of weird. And so I've noticed that myself. Like the market sort of mysteriously likes to, really rally in the overnight session. They usually, there's been so many times I've come in and looked at the overnight futures chart on the ES and seen that like 3 or 4 a.m. when the European session opens, the thing pops up and just kind of trends higher. And then, of course, like you said, everything's a little bit different when our market actually opens here.
That's one of the hardest things about being a day trader of stocks is that you can have all these great setups for the next day, and they're all screwed up at the open the next morning because of the gap around. And that's one of the reasons that swing trading is makes it a little bit easier because we can get gaps against us, but we get plenty of gaps in our favor as well. So if you can position yourself in a stock at just the right time, and then get some traction in your favor, and the markets heat up and you start seeing gaps, a lot of times those gaps are all in your favor. And I think we talked about last week, we talked about the price volume crescendo, the big gap up where you can sell at the open. So that's an example. But
The NASDAQ 100 hit an all-time high in the history of the world this morning at the open, and I put a chart up and drew a line with right at the previous highs there, and it's kind of interesting how it gapped over those highs and then it's kind of fading back in a little bit
well,
now.
maybe we have the whack-a-mole effect. Popped its head up and got knocked back.
Yeah, the S&P is kind of interesting too. I'll pop back the S&P chart. I have a horizontal line drawn at right in the vicinity of the all-time highs, and I mean we're one or two trading sessions away from that. But there's a couple ways to look at this. One is that the market's kind of gone nowhere in 8 months with a huge dip in between, but the year-to-date rally is just amazing. And quite frankly, it's pretty incredible to see this humongous V-looking thing on the daily chart like this because this was a 20% sell-off. I mean, right, just a shade over 20% in the last year, and the year-to-date trend is just is pretty incredible, right? And so, the couple of little times where we had these minuscule dips, you thought, well, maybe we'd actually get, a decent sort of pullback or correction, but this thing just keeps sort of motoring higher. And you have to kind of wonder what happens from here. Not that it really matters, right? Because the idea is that you play it the way that with the stocks and the way that it plays out and all that. But it's a really interesting pattern. You wonder if it's going to break over that, and then and that's when everybody starts buying, or whether we're going to kind of stall out around those previous levels. So, or not quite make it up there. I mean, like I said, we're really, one or two decent sessions away from a new all-time high.
Yeah, I mean, we're in coin flip territory where if you look at the daily chart, it does look like it really wants to power higher, right? Like you said, just kind of grind higher. The weekly chart, you could make the argument that it wants to sell down a little bit on that time frame. So it's one of those things we just have to wait and see. Um, the but that's a good example. We were talking about this previously, that yeah, we're going to see some resistance for the market there. But one of the scenarios is we get up around this area and we clang around sideways for a while until they break it higher. And a great way to think about the markets, and individual stocks kind of work like this as well, but the general market, think of a big bathtub, and as long as the plug is in there and the water is running, the water will keep rising, right? And so,
Sure. Yeah, that makes perfect sense. And so if at some point they pull the plug, and the water starts draining out, it'll become apparent on the chart. That's kind of in the back of my mind. I keep thinking, well, when this sort of crazy rally is over, or at least we're due for a correction, I think that it will become apparent on the chart. And that's what technical analysis is all about, right? Is like sort of staying with the trend, even though, it kind of you may be scratching your head about, why it's so strong. But I think that it'll become apparent when they start letting the water out of the bathtub. There's a lot of gaps on this chart too, by the way. I guess the SPY is probably, if you look at the SPY, that tends to show the gaps a little bit better because of the way that these charts work. So this is the gap right here, and this would seem like a correction if we sold down here on to well, let's see, this was 329 to 41, so big April Fool's Day gap there on the chart. So you wonder at some point if that'll get filled. And there's some other ones. Look at this one way back here. There's a February gap, and there's one in the beginning of March. So kind of interesting stuff, but we'll see what happens.
yeah, here's the thing. The whole gap fill theory, there are some gaps in history that were never filled, by the way, and it doesn't mean that it has to fill right away. I mean, 6 months from now, the market could come back down and fill that gap, right? And then they can say, oh, the gap got filled. So yeah, you can't bet the farm on that's going to happen like real soon,
Oh
but
no, there's gaps from like 20. There's a gap from the election, and when Trump got elected, the market went haywire and was like limit down overnight, and then the next day it gapped up or whatever. That gap's never been filled. So I've never really been after looking at so many charts, I've never been a huge I never supported the theory that all gaps must get filled, because you can go way back in time and find gaps that are likely will never get filled.
sure, sure. And I mean, that really the most useful reasoning behind that is the morning gaps, right? A lot of times the morning gap will get filled, and you could day trade it, that type of thing. But again, not everyone will get filled.
Before we look at some of the, before we look at some of our open trades, and I got a few neat examples we can just kind of discuss or whatever. I wanted to look at the Russell 2000 here, pull up the IWM, And as you can see, with the
With the
Nasdaq
net.
100 hitting a new all-time high today, and the S&P within shouting distance of the high, the Russell 2000 kind of tells a whole different story here. It ran up to this resistance level from the original sell-off, right? And look at what it's doing today. Look at how it's sort of stalling out. So, I've always said that for one thing, this is 2,000 stocks as opposed to 500 or 30 in the Dow or 100 in the Nasdaq, and so this is probably more representative of just like a random a random sampling of all the stocks in the market. You probably would find quite a few that look more like this than up at all-time highs.
Hi. Sure. Yeah, I mean you're absolutely right. This is a much bigger uh, representative cross section of the market than those other indexes.
Yeah, and it really is. There's really sort of a dichotomy or whatever you call it between the Russell and these other ones. I mean, this thing's got a long way. This has got a lot of work to do to get back up here to these highs. I'll tell you something really interesting offhand, real quick, is that this trend line right here, like that I sort of this upward sloping trend line at the top of the chart, this sucker goes back literally like 9 years on a monthly chart. Or I'll pull it up real quick. On the monthly chart, it goes all the way back to like the highs after the big great financial crisis is what they call it now, the GFC, the 2008 meltdown. And so once the market bottomed and started going up, I drew this trend line across the highs on the IWM, the Russell 2000 ETF, and which is kind of interesting. And it's basically contained the price action, and there's quite a few touches on it too. I mean, trend lines are never perfect, but there's quite a few touches on it, and so it's kind of the high end of the range basically. And by the way, I've drawn trend lines across highs like this and seen the price actually break that trend line and go higher. But in this case, it's just amazing to see that this thing starts back in '09, and actually the first touch on it actually starts in 2010, but here we are 9 years later. That trend line is like appearing on my daily chart up here at these highs. Fascinating.
Yeah. No, it's trend lines are very reliable visual reference points.
Yeah. The other interesting thing is this sort of zone of resistance here on the IWM. I mean, look at the past, just 4 days of trading here, where it's kind of, it's kind of like pushed up into that. And what I'm noticing here, this is really weird, is like we're looking at like 5 days in a row where um, the Russell has sold down from its open price, right? And I have my little open high low close bar set so that it colors the bar based on whether it's closed above or below the open. So kind of a little bit of a stall out here, but this sort of shows me why not every stock in the market is kind of participating in the big run up that we're seeing in the major indexes. So anyway, the other thing I wanted to mention is that it just dawned on me yesterday, as a matter of fact, that the markets are closed this Friday for Good Friday,
Ooh, so we
and
get a
so
3-day weekend.
it's a 3 day weekend,
Enjoy
and
it.
yeah, we're heading into earnings season now, and we've got I got a really good example here. SSP. I'm just going to pull this chart up and while I talk about earnings for a minute. So, looking at my Thinkorswim here, and I have all the stocks that are open trades, which I basically it's kind of cool. I just click on the CSV link to export them from the table, from the open trades table, and then I just take that and I basically just paste the symbols into a text file, just import them right into a watch list at Thinkorswim. It takes like, 15 seconds. And so it's kind of cool because that way, even though obviously no one's possibly holding every single open trade, it's kind of neat to watch them each day and see which ones, which ones are having good days and which ones are having bad days and all that. But what I was about to say is that the little icon that shows that earnings are coming out is lit up on like 90% of these stocks. And so that's something that we're gonna have to keep close tabs on because a lot of the open trades are about to get closed in the next couple of weeks here.
Yeah, sure. So uh, the main thing is just keep an eye on that. What is it? The home page
Yeah.
where you put the yeah.
I would encourage everybody to keep a close tab on the ones that you're actually in case in case I make a mistake. I mean, occasionally I do forget one or the date changes or something like that, and there's quite a few of them, and so I try and keep up with it. But obviously, back when we started this, we kind of when the first earnings season started there, we decided that it only made sense to close the open trades ahead of earnings, and it took a little bit before we decided that we would go ahead and put the ticker symbols in. So obviously, it's really important that if you're in a stock that you pay attention to when the earnings are coming out. And it gets kind of weird because most companies release earnings after the bell, but there's a handful that release earnings in the morning before the bell. And so the way that we do it, correct me if I'm wrong, but I believe the way that we do it is that if a company's coming out with earnings, say today after the bell, we would use today's closing price. Like we would close it today using today's closing price. If a company was coming out like tomorrow morning before the bell, before the open, then we would also use today's closing price. Is that right? Is that how we're doing it?
You might have it backwards. Well, one of them, if the close is today, I mean, if the earnings is today at the close, then we use the opening price.
Oh,
Yeah,
okay. Okay.
yeah,
So,
because here's the thing. I mean, that's the guaranteed lockdown price everybody can get out at, right? You open up, you just exit. Now, if again, we've talked about this before, if you're watching an intraday chart, like a 5-minute chart or something, and your 5-minute bars are climbing, you're getting higher lows, you can ride that sucker up or use a 10-minute chart, right? And
sure.
you can squeeze more out of it, but for our statistics, we're using that. And don't forget, a lot of these will have run up much higher anyways because the the main system trailing stop hangs kind of low compared to either the parabolic stops or the targets, that type of thing. So um, you know, it's not that big of a deal you know over the series. Again, everything kind of averages out and smooths itself out. But yeah, if you're able to watch the market during the day and squeeze more out of it, go for it. If you're a busy professional and you got to like close it out and get back to work, that's the way
Okay.
to go.
So like if this company was coming out with earnings today after the bell, we would close it based on today's open. Okay.
Yeah,
All right. Well, that's a good little tidbit of information. The
yeah.
reason
It's six to one, half dozen the other. Because what if we saw, let's say there was earnings tomorrow and the stock gapped way up, right? And that's where, according to our price volume crescendo move, right?
yeah.
You'd want to sell there, right? And other times you'll get a thing where you might sell at the open and the stock goes higher that day. So it'll all average out over the series.
Yeah, yeah. Well, that's one of the pitfalls of earnings season is that it discombobulates the smoothness of the chart. This is a really interesting one, this SSP here, and as far as like open trades, this is one that really catches my eye because of, obviously there was a big run up and then sort of an orderly sell down and then it reversed, and I mean, it's still kind of hanging in there, and you can see how the trailing stops finally getting moved up in the target, but it's just so orderly, right? But here's the more interesting thing is that way back here in January, this was also a trade, right? And so I was looking at this and I was thinking to myself, what sort of trick could you have used to like stay in for this, right? And what I came up with was this. And I'm not saying that, this is something you'd want to do necessarily because it's only going to work, it's only going to work when it works. But back here in January, where, it's basically a similar cycle. You had a little sell down and then the stock reversed and started going up. What I noticed is that these lows right here, like it sort of blasted through the target, right? And so, say like this day you were still hanging on and you're thinking, man, should I sell at the target? Should I take some off the table? Should I use a parabolic stop? But what I was thinking was, that that target, if you used that target as a stop, and this is the only thing I could come up with that would have kept you in this, is if you managed to hold through the move through the target and then said, well, you know what, I'm just going to put my stop down there at the target. It never it's never gone that low. It came close a couple of times on actually the day that the stop got like squeezed up right against the price action there. This is what took us out right here, was this particular day, but it's kind of interesting.
Yeah, what I would say is, whenever you have a level in the market and you want to use that as a reference point to kind of like play off of or utilize, and this works intraday as well. Look for your first, in the case of a long, I would say look for your first pivot low above that level, and then so that would be on what day? Like the 22nd, you had that pivot low above the target price, right?
Oh, okay, yeah.
Yeah, and that's when uh, you'd want to use at least like a 2-2 pivot low, which is two higher lows before and two higher lows after, and then that tells you, hey, that's a pivot. So it would have been what, the 24th or the 25th? It would have been the 24th. You would have had you know,
2-2
uh,
pivot low.
a 2-2 pivot low, right? And so then you could say, okay, I'm gonna go ahead and use that now. So that's a good way to do it. Anytime you have any kind of a horizontal reference point in the markets, just watch for your pivots to form above or below, right? And in the case of a short, it would be the opposite. But that's a little trick. The other thing is, yeah, I was going to say, the trick to staying in a stock is just don't sell it, right? But um, you know, I was going to offer another thing. Like, let's say that you want to. I mean, our system is about short-term swing trading, but guess what? The only difference between a really a short-term swing trader and a longer-term holder is that you just hang on to the stock, right? I mean, you're still going to look for precision entries when you're trying to get into the position. So, but one thing you can do if you really, really, really want to stay in a position in a stock for the long term, right? And you're going to try to accumulate it over months, or you want to be an investor, right?
Hmm.
What you do is, uh, let's say you take your initial trade, your first trade, and then you run up and hit the target, right? Let's say the target's, what's our typical target? 8% or 5, whatever it is, right? It
Hmm.
all depends on the stock. So let's say you hit your target of 8%. Well, you can keep your stop, sell half, and then put your stop down 8% below your entry, right?
Hmm.
Right? You can't lose at that point, right? You're not going to lose capital,
Sure.
and you have a 16% buffer now. Think about that. Now again, this is for the long term. You're like, hey, I want to be an investor, and I'm holding this sucker for 2 years, and you want to stay in, ride out all of the ripples. That's how you do it. And then, of course, you add on as you go, so you average up. We should do a show about that sometime and talk about averaging up for the long term. And
That's interesting. Yeah.
yeah, that's one little trick that I've used, because it's uncanny how many times, maybe 6 weeks after you make your purchase, that stock somehow will dip down for a day or two and come right back down to where your entry is before it takes off and goes, skyrockets for the next year, let's say. Um, right? So that's how you would do that.
Speaking of, that reminded me of this first solar FSLR, which we talked about last week. A couple things that you mentioned. One about, how it just like sort of gapped over gapped over the target here, and we talked about sort of protecting it midway or whatever, and so it just kind of reminded me of this because quite frankly that target on this would be a pretty decent place for a stop at this point on this. But what's more interesting about First Solar is if you zoom the chart like way back, um, it's got like this big giant bottoming pattern, right? I'm gonna extend this over. Look at how this is sort of breaking out of like yeah, it's almost a year long sort of bottoming pattern. We're seeing quite a few. I'm seeing quite a few of these. There's another stock
stock
on our
on our
list that has
list
a
that
very
has a very
similar
similar.
pattern to this.
Yeah, and that's representative of like the major macro float turnover. Um, where the stock basically switches over, it grinds over from distribution, which is net selling, to accumulation, which is just net buying, and that's actually representative of a institutional like rollover there, right? They're the ones that are able to cause that oil tanker to turn course. So yeah, real interesting. And the other thing too is look at those spike downs, like that spike down in November. That's your classic kind of spike and ledge type of a pattern that occurs. But that's a big long term one.
Yeah,
Yeah.
yeah. There's another one too. Yeah, and so I mean, if you zoom in on like this current price action, that's one heck of a nice rally that this thing's had, and it seems to be holding up pretty well. There's another solar stock. I think this is a solar stock. This Sunrun. Um, this is another interesting one. When I was going through some of the open trades, and I noticed how close it came to the target, last week or whatever, and didn't quite make it. A little bit of a dip, but look at it today, punching right through that target. You got the parabolic stop kicked in under yesterday's low. This has been sort of an erratic type of stock or whatever, but nice little run here. But the one that VECO is the one that I was talking about. You can see I've drawn, let me zoom way out on this chart here. It's got sort of that similar bottoming pattern. This one's even more I don't know what you want to call it, but boy, I mean it really dipped down like around $6 or whatever, and it's reversed. But what's interesting about this is that as we speak here, it's trying to break out of this longer term sort of bottoming pattern here. And there's something else that's really fascinating about this, Jeffrey, about this sort of current trade here or whatever, and that is that this dip right here. I don't believe the system. I'm not sure of this, but I don't believe the system identified this as like the proper dip to get in for that little run there. But this time it actually did sort of, and I mean they just look so similar, right? It might have had to do something. It might have had something to do with how quickly it sold down over here and recovered. As far as there was a little bit of extra over here, but this one's looking pretty good too. It's it's one of those things where now that it's hit the target or whatever, probably would have been. It seems like it would have been a decent time to maybe take half off of the target because it looks like it might want to come back down and sort of retest this breakout. But this is sort of working on a longer term breakout of this bottoming pattern.
Yeah, well, just keep in mind, if you're a short-term swing trader and you just want to go for the short-term targets, that's great. If you have a bent towards planting some positions for the longer term, again, $12 stocks go to 30, and $30 stocks go to 60, and $60 stocks go to 200. It's just a matter of time and letting the stocks, develop.
Sure,
Sure.
sure. Yeah, I was. We were talking about like how the system automatically sort of weeds out the ones that don't get followed through. So I just want to look at a couple that have gotten stopped out here. just recently, like the last few, just for the heck of it, just to, obviously it's fun to look at the ones that, are still in the open trades and going like gangbusters, but occasionally, let me take this line off of here. This one was kind of interesting, I mean, real strong move up, and then it was sort of, just kind of grinding sideways back over here, and it managed to trigger in, which looks to me like, it was trying to break back out of this range. And a stock that looks like this, obviously, after a consolidation like this, it can bust out and just take off and hit new highs, but that doesn't always happen, right? But here's the point is that if I'm not mistaken, I'm going to look this up real quick over on the closed trades. Yeah, so this was a 2.8% stop, right? Let me put that on the chart. Minus 2.8%. And so that's kind of, that's kind of the idea is that the old saying, let your winners run and cut your losers short, right? You can't really feel too bad about a 2.8% stop because not every stock is obviously going to get followed through, right? And so the idea of, taking a small stop out quick. Now look at this thing. It's down 2.8% today. This is a great example of, why you want to stick with the
Stick with the
stops, right?
stops, right? Yeah, take your stops. The stops are a good thing. They prevent catastrophic losses, catastrophic drawdowns, and you know, it, letting a stock get away is one of the worst sins in trading. Uh, because what happens is, now imagine that you were in this stock right now, right? And you're taking a much bigger loss and you're going, this thing's got to come back, right? And you're looking at the market and you're going to start him-hawing around and going like, the market's got to bounce and it's probably, maybe if I hang on, it can go back to where I bought it and I can just get out. A week later, it's down at, 68. Okay, totally possible.
Sure.
All just take your stops and walk. And it's like we've joked before. Stock trades and setups are like buses. Another one, always comes along, unless they move the bus stop. But anyway, yeah, take your stops and move on. And what I was going to say is that the interesting thing here is in this example here, uh, once you uh, once you look at like all the closed trades and like you can sit and do analysis, and we can run these numbers here for another show, but on average you're going to get 3 to 4 times gains on your winners than you do on your stops. Okay, just think about that in your head. And that's if you're like going for the targets and uh, letting some of your runners run. You're going to see 3 to 4 times the gains over the series versus your average stop out. Okay, so that's the math of the system, and so that's why you don't want to let one stock get away and then screw up that ratio. Is what I'm trying to get across.
Sure. So just like we talked about last week, yeah, I've pulled up the like the open trades, and so it goes back to the cut your losses quickly and let your winners run. And so by the nature of the system is that the stocks that sort of trigger in and they don't get any follow through at all, they get stopped out relatively quickly. And some of them the stop gets moved up, but it's the winners, the ones that keep powering higher that like you said, these gains here dwarf on the open trades. They dwarf basically the stop outs on most of the trades. There's another one I wanted to look at. Let's see, it was NSTG. Yeah, this is an interesting one because because the stop, like the original stop here, was basically it triggered in sort of on this range break right here. This is kind of a weird chart too. I was looking at this bar way back here in March and trying to figure out, what that was all about. Anytime I see a stock that has like a day that looks like that, it makes me leery about it anyway. I would have probably, theoretically, I'd have looked at this and I would have just passed on this because, there's always plenty of stocks that are triggering in. Whenever I see some sort of weird anomaly on the chart, but anyway, the point I was trying to make was that was that when this triggered in, it got a little bit of a decent follow through, enough that that stop got moved up, right? And so that's sort of, this is sort of the best case scenario, is because, you're talking 35, 40 cents here, right? Like there was
There was
enough
enough
of a
of a
move that the
move that the
stop was
stop
able to
was
get
able to get.
trailed up.
Yeah, and don't forget our 3-day trick also, where three higher lows above your entry, you can go to break even if you want. So that looks like we would have had three higher lows. You had four higher lows basically even. You see that?
Hmm.
So you could have made your break even move. And I recommend that you in this kind of a market, you probably do that. Maybe at least do that on half. We're all trading different sizes, and in the beginning.
In the beginning, you want to start off small. Yeah, we heard your dog barking. Nobody's worried about that. But yeah, I mean, here's another good example of why taking the stop and just moving on is probably a good idea, and especially that's sort of the point of the trailed up stops, because the winners are going to take care of themselves, right? I mean, theoretically, just hypothetically, suppose that that this stock sort of turned around over here and kept going, then this stop's going to get trailed up, and it would have been, if the stock had gone up another day or two, it would have gotten trailed up past the trigger. And so that's what I talk about, like weeding out the ones that don't get the real follow through. They basically get closed. Worst case scenario, like you always say, is a full stop out, which on this particular one looked like basically just, I mean, that could have happened quickly. You can see how some of these it was making a bunch of long range days sort of basing out here. And so anyway, no huge big deal. If I look at this one, let's see, the stop out on this was from here to the raised stop was only 1.4%, right? Totally no big deal. I pull up one more just for the fun of it. It's a very similar sort of situation here, where this is kind of a higher price stock, but where the stock triggered in and kind of hem-hawed around and pulled back a little bit, but there was enough. There was actually, it looks to me like there was three highs above that. The thing about moving the stop to break even is, if you look at a stock like this and you see that it's sort of trading sideways, basically like right here, even though you had three highs above the trigger or above your entry or whatever, you would have still, if you moved your stop up there, boom, you'd have just been out. So another case of 1.6% stop because the stop got trailed up.
Yeah, and don't forget that the market, we morph through big cycles, right? So we're going to have cycles where almost all of your entries take off like gangbusters, right? And run and go on to make you gains. And then we're going to go through cycles where a higher and higher percentage of your stocks kind of fizzle. And so you want to think, risk control. I mentioned last week and previous weeks, when we get into a market and you can go look at the closed trades and you can see how we get little strings of stop outs. When you start seeing that and you're looking, you should be looking at the general market as well. All you got to do is back down a little bit. Keep trading. Don't take as many trades per week, let's say, and scale your size down a little bit. But just keep pushing through, because you never know, right? We can't predict what the market is going to do. We just have to stay in the game. And so that's exactly what I do. I scale size down just a little bit, and I take just a little, few less trades, but I'm still in the game and I weather through it. And before you know it, a few weeks from now, we could be looking at the charts and everything will have moved much higher, right? And so you want to just stick with the series, basically.
Yeah, this is the only stock that triggered in after the close yesterday. And boy, this is kind of, I mean, this is a lower price stock. We don't see too many stocks in the $10 range. We actually have a cutoff, nothing below $10, right? And that's probably a good thing, tell you the truth, because in the recent market environment, it's like the higher price stocks seem to be the ones that are, outperforming the big name, the big cap, big name stocks. But I've just sort of noticed since we started this that that a lot of the much higher price stocks is amazing as it seems tend to do really well, and the lower price stocks, they have more volatility, and that's that's probably what it is. Anyway, this has got a pretty nice looking little pattern here. I mean, this thing's, it's had a couple of little dips, and it's got a really nice uptrend. This is a very sort of a shallow little dip here, but headed in the right direction. And every time I see a chart like this, I just want to draw like a trend line across the highs, and got a pretty good look to it. So this is the new stock that's triggering in for today, and seems like it's kind of bucking the trend a little bit here. So, real quick, okay, earnings on this are on 5/7. Yeah, I've noticed that over the next couple of weeks, the floodgates are gonna kind of start opening up next week, and then after that, there's gonna be a whole lot of earnings coming out, and so that's going to, it's kind of what I was thinking in my mind. Every earnings season is sort of like a refresh of everything, right? Because a lot of open trades, even though they may be like headed up and looking good, and there'd almost be, you'd look at the chart and you'd say, well, geez, I don't wouldn't want to sell this now, but at the same time, we've seen so many, just really erratic price moves when a company releases earnings that there's no edge, right? Sometimes, like Netflix came out with earnings last night, and the first reaction was it was down big, and then this morning, it's actually up. And so you see all these crazy like sort of moves, and so holding the stock over earnings is just a crapshoot, like we always say, and so they're going to get closed.
Well,
And
hopefully, the earnings season will give the market the boost, right? That's where a lot of times we see a good boost in market behavior is through earnings. So, um,
oh yeah, that's sort of what they say drives stocks. I want to take a look at one more example, and we'll wrap this up. Kind of discombobulated this morning because there's a truck across the street, and I don't know if you can hear the background noise. Hopefully not, but they're pressure washing the house across the street, and so it just figures, that it's real noisy in my office, and it's kind of like, we used to do these shows, and as soon as I'd start the show, there'd be the landscape crew would show up with their blowers, and that's it just happens. This is kind of an interesting example. This FN. Um, you can see that we're on like our second little cycle of this one, right? And this is another one. I was kind of studying the chart last night while I was marking it up here, and I thought it was kind of interesting that this particular cycle. Look at how that target is here, whereas like the previous cycle, the target was way up here. And so what I was thinking to myself is that obviously the what that's got to be based on, since we're using an ATR for the target, is that the range is kind of tightened up a little bit, right? So, like a 3.5 ATR back here would have put the target here, but the range is sort of tightened up a little bit over time because we're using what, a 1 month ATR.
yeah, basically, right.
So there you have it. So this thing loves to just sort of cycle up and down, and kind of an interesting pattern. Obviously, there's a beautiful longer term uptrend here. Geez, it's almost textbook, textbook uptrend, and there's a lot of volatility in there, and so this is just a good example of how the system will catch multiple cycles in the very same stock, and kind of
Yeah,
interesting.
yeah. There's no reason that in a super strongly trending stock, and many stocks can trend like this for a year straight. We can see repetitive setups, right, and moves to new higher highs. I mean, that's what an uptrend is higher highs, right? So um, a lot of these super strong stocks, they're going to recycle and go right back into the pending trades list.
Yeah, everything about this sort of matches the concept of what we're doing is, finding the system's looking for stocks that are in uptrends, and it's taking advantage of like the pullback. Stock pulls back, sort of bottoms out, and shows signs of reversing the opposite direction, and then we jump on board for a quick move higher, and hopefully it hits the target. So this was actually a fairly reasonable, this prior one was a fairly reasonable trade, even though it didn't hit the target, using the. So, quick question, and then we're going to wrap this up because I'm having trouble dealing with this noise across the street. And like I said, I'm not sure if you can hear it or not since I got this microphone right up to my face, but it's driving me crazy.
I can't hear it, but
Okay. What I was going to say is this previous cycle over here, you jumped into it and it started going up and started going up, and it, looked like it was going to get towards the target. But when that parabolic stop kicks in, would you suggest, rather than sort of getting greedy and saying, "Oh, I'm holding out for the target," would you have suggested back here, like going ahead and putting like a putting a stop loss in at the parabolic stop for half the position?
well, sure, that is a great uh, methodology to follow. If you get above that parabolic stop, then you can protect half, but it's gonna matter on how big your position sizes are, right? Now, again, if you're starting off and you want to replicate mechanically what you're hoping to follow out in the future, then don't worry about, like, maybe your commissions get in there and they don't look like it's a great ratio because your trades are so small, but you're doing it just to replicate the mechanical strategy. You're not worrying about how much money you're making, you're just going to follow it. But when you start trading much bigger sizes, then yeah, it behooves you to go ahead and you can take half off because that's locking in some guaranteed profits, real profits at that point. Uh, so it's 6 to 1, half dozen to another. Remember, over the big series, we're going to have an example where uh, you could have gotten stopped out on half, and then the trade goes much higher,
Mm-hmm.
right? And you would have made more if you would have just stayed in on the whole position versus taking half off, right? So it's really, we're always dealing with a Rubik's cube type of an issue in any kind of trading strategy. Every time you make a little change, it can affect stuff out in the future. Uh,
Sure.
I
Well, and we see like every sort of example sort of cycle through too. You can always go back in hindsight and say, well, yeah, this was perfect. You saw that parabolic stop kick in, you put in a sell order for half of it, and it got hit, and so you got a decent profit on half of it there, and you did okay on the second half. It was still
Yeah. If this was like a reality TV show series where you had to like make gains in competition by a certain date, then yeah, you'd be stressing out over every little move you made. But if you're going to be a swing trader over the long term, right?
hmm
And if it's profitable for you and you stick with this over the long term, you're going to see every possible uh, uh, scenario of follow through. And so don't get too worried about every little thing that happens. If you on a trade, if you get taken out, or if you, let's say you had a chance to get out of a parabolic stop and you didn't, and it comes down and knocks you out break even, don't sweat it because there will be others that make up for that,
Yeah,
right,
sure. I mean, you
over
can
the
you can
series.
actually look forward when you close a trade. That frees up the capital to like take the next one that comes along, and which one interesting thing I wanted to point out here is that this one's kind of a great example because you got two different cycles in the same stock. On this one, it rallied sort of right out of the gate after the trigger, and then the parabolic stop kicked in, and boom, like the next day, it hit that parabolic stop. on this particular cycle we're in here, the parabolic stop kicked in after the close yesterday, right? And so instead of doing what it did over here, like the very next day hitting it, look at this. It just basically blasted through the target, opened today, well above the target. And so, it's just sort of two examples of how it can play out differently on the very same stock. So, one quick last question. I was talking to one of our members yesterday on the phone. It was kind of had an interesting conversation, and he told me like sort of how he was implementing the system, and he wanted to get your thoughts on this. I sort of thought it was fascinating, but this is a great example. He said what he's been doing is waiting for the close above the trigger, right? Like he waits for the stock to actually hit the triggered trades, and then he places a limit order at the trigger price the following day. And he says that most times, not always, I mean, occasionally they just like sort of take off, right? But he said that most times that he's getting filled like at the exact trigger price. Now he is waiting for the close over the trigger, and then he's placing a limit order at the trigger price. And if he gets filled, then he's in at the trigger price, right? And so, like, this day right here, 4-1 was the first day it closed above the trigger. And then, so the following morning, rather than just buying it at the open, he'd place a limit order at the trigger. He would have got picked up here, and lo and behold, he's in. And one of the reasons that he said he likes to do that is that way, when he's following along with the tables, he knows that he's in at the exact trigger price.
Yeah, and that's a great idea. And here's the thing: if you're gonna, and again, if you're gonna follow that methodology, then don't sweat it or fret like if you don't get filled. You might not get filled for a couple days even, right?
hmm That's what he
So
said. He said he was giving it like 4 or 5 days to fill
right,
at the
so
trigger.
stick that limit order in, and it's good till canceled, and then uh, maybe like let's say you set the trade at a Monday and give it the whole week and reevaluate, right? So obviously, if the stock makes a ginormous move, like runs all the way and hits the target, you don't want to like buy it on the way down, right?
Sure.
It's already like popped its cork, basically. But no, that's a great idea, and the nice thing about that is it can be totally fire and forget, right? You get a close above the you get a close above
Trigger
uh,
line.
the trigger line, and then now the only thing you'd want to do is maybe next morning you'd want to place the order because what you could have a big gap down, let's say. So that
Gotcha.
would be the only thing I'd say is, but again, over the series, if you're doing this right and you're playing small sizes to start, you could place your orders that night, the night of the close. Just place it and let the chips fall where the chips fall. But no, that's a great idea.
Yeah, I thought it was interesting, and it kind of made sense. We've talked about the different entries, and if a stock closes above the trigger, and one more example. I just wanted to bring this up. This yin, YINN, because I mentioned this to him when we were talking. Is something like this. This is triple long China, right? And so, look at the gaps on this, right? It actually gapped over the trigger. And so, if you just look at the chart, you know for a fact that this stock is generally going to gap almost every single night. It's just the nature of it. And so, you know, that's why it really, it makes sense to sort of look at the chart and see what's going on. And obviously, on something like this, you wouldn't necessarily expect that you could get filled at the exact trigger no matter what, because this basically is going to gap whichever direction the Chinese market traded overnight or whatever. So you have to use a little bit of common sense. But I really thought that his strategy of getting filled at the exact trigger, and then there's cases where a stock will just close above the trigger. The next morning it opens higher and just never looks back. You don't get filled, so no harm, no foul, as you like to say, and you just move on, wait for the next one. So kind
Yeah,
of
and
interesting.
one little thing I'll add to that, as you increase your size, right? The goal is if you're, and this is a great training we got to do about, trade size progression and all that,
Hmm.
and talk about the mechanics of that and give a couple plans on that. But as you build your size over time and you start playing much, much, much bigger positions, then there's nothing wrong with hedging your bets. Like, so in other words, you can take uh, the entry at the open the next day on half, and then place your limit order on the other half down at the trigger price, right? And that way, you're in no matter what, right?
Yeah, yeah, yeah. That's
And that's just
interesting.
that's just another way to do it. That's how you hedge positions.
Yeah, here's an example where using that sort of methodology there, you would have not gotten filled. I just wanted to just wanted to show the pitfalls of that, just in case. No huge big deal. Like I said, if the stock, and we see this a lot, stock kind of rips right through the trigger, and then a lot of the time you'll get an opportunity the following day or the next few days to get in at the trigger price, and something like this, it would have just never filled you, and so no big deal, you just sort of move on to the next one.
Well,
And so
this is a good example of where, let's say you were going to buy 200 shares, you bought 100 at the open on the day following the close above the trigger, and then you placed a order down at the trigger for 100. You would have been in at least with 100, right? So
yeah, and so you didn't get
it's
filled. That's a pretty
it's a
good
six.
twist on the same strategy, honestly.
Yeah, no, that makes, again, when you start moving to bigger sizes where your commissions play a much smaller role in the equations, then that makes perfect sense. If you're playing real small positions and your commission rate, and again, if you're going to stick with this, I behoove everybody to search out the lowest commissions, because commissions can be really, really low. You shouldn't be paying $20 for commissions anymore.
Yeah, yeah.
Let's put it
No,
that way.
I believe most brokers now have lowered them, and geez, there's the kids nowadays are using, like, they're trading on their phones with like something called Robinhood, and there's no commissions. So anyway, hey, it was a pretty good show today, and we will have to we'll have to put together a nice little sort of strategy session about position sizing and pyramiding up, and I will make sure to have the trading calculators all set up in my other browser since they're not working so well in this old IE. But anyway, yeah, that sounds kind of fascinating. So time flies. I thought we were going to do a really quick show, but we've gone an hour, so that's going to be it, Jeffrey. Thanks for coming on. Appreciate you guys tuning in, and we will see you next week. Enjoy the long weekend.
Yeah, I was just going to say, everybody have a great 3-day weekend.
All right, we'll see you next week.